Hey, this is John Crypto. Breaking. And I mean breaking the whole thing. The Shanghai Futures Exchange's silver stocks went down from 462.62 tons to 449.65 tons. That's not an error. That's 13 tons of real silver gone in just a few days, taken right out of the vaults. Take a break for a moment. Take a deep breath. Make that happen. That is almost 418,000 ounces of real metal. That's $10 to $12 million worth of real silver bars leaving the building, not IOUs, futures contracts, or paper promises. So I only have one question for you. If people say that demand for silver is weak, if business is slowing down, if there is plenty of supply and no shortage, who just took 13 tons off the table? Because silver doesn't just disappear. It doesn't go away. It doesn't walk out of a vault just for fun. Someone needed that metal, or someone no longer trusts what the report says. And that's when the crime scene starts to glow. This is the lie that is being told to you. Most people are telling a funny story right now. They say silver is boring and range-bound. They say that industrial demand for silver is slowing down and that inventories are always moving, so don't worry, there's nothing to see here. You heard it. Just normal changes in stock, not permanent. Sound. The price of futures stays very steady for now. No breaking out. Don't freak out. No alarms. And that's exactly how they want it. The metal is flowing away while the price sleeps. This is the truth they can't say out loud. They aren't moving real silver around. It isn't being put into a different group. It doesn't move from one sheet to another. It's being pulled out. The stocks on the Shanghai Futures Exchange are for real delivery, not for use in a casino. When metal leaves those vaults, it means someone came in and said, I don't want paper, I want the bars. You can't take away 13 tons unless one of two things is happening. Someone really needs silver right now, or someone has looked at the paper market and said, I don't believe any of this anymore. That's all. There is no other option. Now connect the dots to the prices in the West. What you see on your screen is the price of silver. That's not a price that exists in the real world. That is a COMEX paper price, which is a price for derivatives, leverage, and a made-up number that contracts that almost never settle in metal hold-up. COMEX trades hundreds of millions of ounces of silver every day. Let that sink in. Hundreds of millions. But here's the thing. Only a tiny bit of that silver can actually be sent. A lot of those contracts are still in effect, put off until later, paid in cash, settled in promises. It's a fast-moving churn machine that makes it seem like there is a lot of supply. So right now, there is a huge difference forming. In the West, silver paper moving back and forth at the speed of light. Sounds that explode, games that have open interest, algorithms hit bids and offers like they're playing a game. In the East, the vault is emptying of metal. In a calm way, steadily, no news, no noise. Shanghai means leaving in person. COMEX is the same thing as paper churn, and this is where retail really hurts. Retail looks at the chart and sees nothing, same price. The market is dead, not interesting. People aren't talking about silver, no dopamine, no action. So they give up, they do sell. They change what's popular every week. Smart money has a very different view of things. They see that the stock market is going down. They notice that their bodies are getting tighter. They see a market being held back while the real asset is leaving. This is the first play in the story. Bore them out. Shake them out. Get everything. They don't need the price to go up yet. First, they need you to go. While you're reading headlines and futures candles that say, nothing's happening, the real move is already happening underground, off-screen, and in the vaults. This doesn't make me feel good. There is no hype here. This isn't a deal. This is removing supply from the system, and this is the part that should make you feel bad. Shanghai is not a small market. You can see the biggest manufacturing economy in the world. When silver leaves, it usually goes to industry, infrastructure, or strategic stockpiles. These are places where it doesn't come back easily. So this has nothing to do with the price right now. It's about what breaks next, because paper markets can stay wrong for a long time, but they can't stay alive forever if they drain physically. And if you think this is just a random move in the inventory, a coincidence, or a one-time data point, You won't believe what's happening with silver vaults all over the world. Shanghai isn't the only one. Because Shanghai wasn't just a one-time event, it was the first warning. Let's go to the scene of the crime now and put the evidence out in the open. Don't pay attention to what they say. Start with what you know. Shanghai Futures Exchange, 13 tons less silver in real life. Yes, that's right. Put down on paper, reported, gone. That should have been enough to set the story about silver on fire. But here's what most people don't get. Shanghai isn't just another stock market. It's the canary in the mine for silver. Shanghai didn't care about price in the past. It is in charge. It's not because traders got excited when stocks went down there. It's because there was more real demand than real supply. Factories, manufacturers, and strategic buyers don't take chances. They buy materials before they become a problem. There is only one reason why stocks go down. There is more silver leaving than coming in. And once that process starts, it almost never stops quietly. Now pull back, because Shanghai is just one vault in a global system that is already too full. This is where the leverage trap ends. The base of the Western silver market is so weak that it would be funny if it weren't so dangerous. The COMEX doesn't buy and sell silver. It buys and sells claims on silver. A lot of open interest. Hundreds of millions of ounces traded all day long, every day. But what about the list of things that need to be done? Very small. It's so little that it's funny next to the huge pile of paper on top of it. Here's the truth in plain English. For every ounce of silver that can be delivered, there are 50 to 100 paper claims. That's not a real market. That's metal with a small amount of money set aside. It only works if one thing happens. Nobody wants the metal. The illusion falls apart when too many players say, "No cash settlement," or "I want delivery." The price of paper makes it look like there is more metal than there really is. People need to be too comfortable for this system to work, on trust, about people who think the contract is the silver. Shanghai just told you that faith is going away. Now think about this. If this setup is so weak, who benefits from keeping the price low? The bad guys are here. Banks that buy and sell gold and silver. The same names over and over. The fingerprints on all the charts are the same. They short silver futures a lot, especially when there isn't much trading going on. Sessions that go on all night. Hours of low sound. Good times to have a lot of fun without spending much money. Why do it there? That's where you can find stop losses. That's where people stop trusting stores. That's where fear spreads the most quickly. They lower the price just enough to make people have to sell, which causes margin calls and forced sales. When the headlines scream "silver weakness" and the screen turns red, they stop reading the paper and go outside. This isn't a guess. This is a theft. Here's the bait and switch, step by step. To start, get rid of paper silver. Prices drop quickly, sharp, mad. Second, the media does what it is supposed to do. Silver is dead. Slowdown in business, not a catalyst. Third, panics in stores. ETFs lose cash. People with weak hands give up. Fourth, and this is something you never see, buyers come in quietly. No press release, no tweets, just trucks, vaults, and taking things off the shelf. Fifth, vaults leak. And how much does it cost? It stays down until it can't do it anymore. Because paper can make an infinite number of copies on a screen. You can't print out real silver. We've already watched this movie, the month of March 2020. Do you remember the accident? The cost of silver went up. Futures went crazy. The paper market is dropping quickly. But during that time, try to get some real silver. Prices went up a lot. The coins are gone. The bars were gone. Dealers stopped taking orders. There were a lot of delivery delays. The article said that silver was cheap. Reality said that silver was not there. At that point, the mask fell off. When paper breaks, it rewrites the price overnight. And here's the uncomfortable truth. Things are eerily similar now, but there are fewer goods in stock, more debt, and less trust in the financial system. It's not the event that Shanghai pulls 13 tons, it's the sign. It's the first sign that someone has decided that the paper game isn't worth the risk anymore. And this is where the story changes from being about the market to being about politics. This isn't just what the West wants anymore. It's not just hedge funds or buyers in the industrial sector that are doing this. There is something much bigger going on below the surface. The metal is moving east. Claims are staying in the western part of the country. And the gap between those two worlds is growing. When real silver moves from western-priced systems to eastern vaults at higher premiums, it's not just noise, it's price discovery moving. And once price discovery leaves COMEX, it never comes back the same way. But this is where the system starts to break down. People in the West don't just want this. This isn't just one trade. The East is taking things away from the West. It shows in the price difference. When you stop thinking of silver as a single global price and start looking at where it really trades, the whole illusion falls apart. This is the best part. There isn't just one price for silver anymore. New York silver is paper-heavy, has a lot of leverage, and is kept down. Then there's Shanghai silver, which is real, urgent, and getting more and more expensive. Silver in Asia is worth more than it is in other places. Not theoretical premiums, but real premiums that are paid in cash. The turnover is quicker, withdrawals that happen more quickly, faster delivery. Shanghai is where metal goes. It moves around New York spreadsheets, and that tells you everything you need to know about where price discovery is going. The number is still on the screen at COMEX, but it doesn't decide how much silver is worth anymore. It tells you how much money is worth. The real market is moving somewhere else quietly and efficiently, and it doesn't care about Western stories. Now put everything together. If silver in Asia costs more than silver in New York, what happens next? Arbitrage. The price of metal goes up. Not contracts. Not funds traded on an exchange. Bars. And every ounce that leaves a Western vault to meet Eastern demand makes a system that was never meant to work even tighter. This leads us to the most important question of all. Who is buying? But this isn't a store. This isn't the same as Reddit. This isn't like coin shops running out of eagles. This is quiet, planned, large. Day traders don't pull 13 tons of silver out of the futures market. Retail doesn't get rid of its stock without making a lot of noise. People don't move like this because they're scared. They move like this because they planned it. 3 groups of people are most likely to buy. First, big businesses, manufacturers who can't afford to have their supplies messed up. People who build solar panels. Businesses that make electronic devices, battery supply chains. Their whole business is at risk if they run out of silver. Second, groups that work with the government. Companies that don't guess, they protect. Piles of stuff. Reserves. Things that are important to the West's economy, but not part of the West's money system. Third, building up in a smart way. Groups that understand what happens when people stop trusting paper markets. And here's the most important thing that no one ever says out loud. You shouldn't pull metal quietly if you don't want to keep it. You don't rush delivery if you think prices will keep going down. You don't drain vaults if you think there is enough supply. You take physical possession when you think the system is lying. Now put policy on top. China isn't guessing about silver. It's making its economy depend on it. A lot of growth in solar energy. More gigawatts are added every year. Silver is needed for every panel. There is no large-scale replacement. Being the best at making electronics, chips, connectors, medical devices, and cars that run on electricity. Silver is everywhere. You can't see it, you need it, and you can't replace it. People in the East don't see silver as a way to make money. People act like it's infrastructure. In the West, people act like it's a pattern on a chart. That difference in how you think could kill you, because the demand for infrastructure doesn't care about future prices. It doesn't wait for dips. It makes sure there is enough supply ahead of time, no matter what CNBC says. Now look at the supply side. This is where the trap becomes clear. Most of the time, mining for silver is just a side effect. It comes from businesses that use lead, zinc, and copper. That means that silver production can't just go up when demand goes up. You can't just turn on a switch and get more silver. So when demand goes up, whether it's for industrial, strategic, or both, the supply stays the same. That's how squeezes happen. Not with hype, not with headlines, but without saying anything. Things run out of stock. Prices go up. Times for delivery get longer. The price of paper keeps going down until one day it can't sell anymore. This isn't just a guess. This is how things work. And this is the part that makes the people in charge worried. Real silver doesn't go through the whole financial system. Not a bank, no one to do business with. No, it doesn't rely on trust. It doesn't depend on being able to pay. It doesn't depend on promises to settle. That's why it scares them so much. A system that relies on debt, leverage, and trust can't handle an asset that tells the truth. The truth about not having enough. The truth about worth. The truth about taking risks. So they keep it down. They made it shorter. They laugh at it. They keep it boring, at least until the metal goes away. The old system can't keep track of things when price discovery moves from COMEX to physical markets, especially in the East. At that point, the prices of futures don't match what happens in real life. The future isn't as bright as it seems, and this makes it impossible to avoid the conclusion that the economy of the world can't handle finding out the real price. And when honest price discovery happens, everything built on lies starts to fall apart at the same time. Because silver isn't the only thing in the world. The whole financial system is falling apart because it's too heavy, not just vaults and futures contracts. Begin with the background that no one wants to look at for too long. The US is going deeper into debt, trillions stacked on top of trillions, getting bigger every year. There is no political will to stop it. Paying it off is not possible. Real yields, on the other hand, are all messed up. Bonds are no longer risk-free. They are now faith-based investments, which means you are trusting that the system will last long enough to pay them off. And that trust is going away, slowly at first, then all of a sudden. That's why metals are back in the news, not as trades or bets, but as ways to get out. Exits without noise. The insurance is over. I don't want to be stuck when this breaks comes out. Spreadsheets won't help you when you lose faith. Now look at what the central bank said. The Federal Reserve is in a bad situation. Absolutely. If they raise rates too much, the bond market will crash, governments will go out of business, and already shaky leveraged institutions will fail. But they can't cut rates too much either, because inflation never really went away. It just went underground. Food, strength, place to call home, insurance, taxes, it is still taking money from people. What is left? There is only one move left on the board. Make the currency worth less. Print, explode, act like it's stability. And metals, especially silver, are always at the top of this world. They don't wait for the news to come out. They don't wait for the news to come out. They follow orders, and the way things are set up now makes it clear that promises made on paper are getting less strong. There are fewer things that are real. That's the problem. The price of paper silver you see right now isn't real, a way to get people to believe you. A number that is kept by leverage, rollover, and the thought that no one will ever ask too many hard questions at once. Actually, silver can be found in real life, and those two things can't last forever. Finally, someone says, I don't want cash, I want it delivered. Then another. Then one more. At first, it's not that bad. They move things around in the stock, they give out extra money, they put it off. Then the delivery doesn't go through. After that, premiums are no longer linked to the spot. After that, COMEX loses its credibility, not in a press release but in silence when contracts stop meaning what people thought they meant. That's when the price doesn't go up well. It breaks. And this is where people make mistakes. You don't need numbers from the moon. You don't need goals that are too far away. You don't need all the fuss. You just need to think logically. The stock market is going down. There is more and more demand for strategy. There isn't enough supply, and it takes a long time to respond. That's all it needs. Price doesn't need analysts or anchors to tell it what to do. The price just goes back to whatever level clears real supply and demand when the physical market takes over. With violence. All of a sudden. Out of nowhere. It's too late to rotate or chase when that happens. You can't ask your broker how much the premium is anymore. That's why the call to action has always been the same. You don't own it if you don't have it. Not in an ETF, not in an account that is shared, not in a promise that says backed by silver, not in the banking system. No more middlemen. In your hands. The whole system is set up to keep you stuck in it when you lose faith in yourself. Silver is bad for that system because it lets people leave without asking. No one to trade with, no chance of rollover. No change in policy overnight. Just wait. That's just how things are. This is how every empire ends. Not by attacking, not with a revolution. But people can't believe promises that are printed quickly. The end of every empire is the same. They print promises until people want real things. Investing in silver is no longer a good idea. It gives you freedom. And listen to this. There was more to this than just a story about silver. This is a story about how a system came to an end. People will think everything is fine as long as they are looking at screens. But the game ends without a sound and without permission when vaults start to bleed and delivery requests rise. Remember this. Prices for paper can be wrong. Metal that is physical never does. If silver really were dead, it wouldn't be possible for 13 tons to just vanish from Shanghai in a few days. If there really was plenty of supply, you wouldn't pull out metal without making noise. This is when history is made. And later people will say, I wish we had seen it sooner. So here's the truth. You don't own it if you don't have it. ETFs let you in but not out. Banks don't keep metal, they keep track of numbers. When the system starts to shake, the only thing that matters is what you can really get. If this study made sense, if you think this information should get out, give it away. Get people moving, get out of the illusion of the system.